Okay, let's get started. Firstly, good morning and welcome to the BGL Online Summit, a virtual event showcasing some of our RegTech 2025 sponsors. I'm Lily Williams, Partnerships Manager at BGL, and today's session, How to Support Your SMSF Clients with Crypto Investments, is co-hosted by CoinStash. I'm pleased to introduce today's presenter, Simon Ho, Head of SMSF Strategy at CoinStash. Founded in 2017, CoinStash is Australia's leading cryptocurrency SMSF investment platform that is Australian owned and operated and has helped over 50,000 Australians securely invest in crypto. CoinStash offers a safe place for investors to buy, sell, trade, and manage over 1,000 crypto assets with confidence. With industry-leading security and a comprehensive suite of investor-focused products and services such as SMSF auditor-friendly, 30 June reports, and dedicated support, CoinStash is the trusted partner for SMSFs navigating the crypto market. Before we get started with today's session, I'll just cover some general housekeeping. The session will be recorded. So if you miss anything or you need to jump off early, after the session, you will receive an email, and that includes a recording of the webinar plus the webinar slide deck. The Q&A function is available to you. So if you have any questions throughout the session for Simon, please pop them here. And towards the end of the webinar, we'll go through a bit of a Q&A session. So Simon, I'll hand it over to you to kick things off.
Thank you, Lily. Thank you for having me. And hello, everyone. Good morning. I'll just get my screen share up. Thank you for the introduction, Lily. A bit about myself. I've been involved in digital assets since 2013. So prior to joining CoinStash in 2021, I was at the ATO in the policy department, then moved over to private practice at KPMG in the tax and private enterprise division. And then I held various senior finance leadership roles in listed and private businesses. I've managed my own self-managed super fund for about 10 years now. And I've recently been qualified as a SMSF specialist advisor. I'm a registered tax agent personally, and also an admitted lawyer. You can visit my profile. Always send me an email using details on the screen. Next. So Lily's already given a bit of introduction to CoinStash. The only thing I'd probably point out is that before I get into the meat of the presentation today, the only thing I'd probably point out is that CoinStash, we're externally audited at the company level. So we lodge audited financial statements with ASIC. We are the only exchange or platform in Australia that puts our assets and liabilities, crypto assets and liabilities on the balance sheet. So you can see exactly on our balance sheet the total number of value of crypto assets held, and also the amount that we owe our customers. The other thing to point out is that we have specialist advisor access. So it provides you as an accountant, auditor, or financial advisor with visibility over what your clients are doing if they're using CoinStash, and also educational content as well. With that, I'll launch a poll because it would be really good to understand who we have in the audience today and the different roles that you may play. So the first question is the role. What's your role? Accountant or administrator, auditor, financial advisor, or other? That's great. About 90% are accountants or administrators. That's great. I've prepared the presentation today with something for everyone. But yes, being an accountant myself, it is slightly biased towards that, so that's great. The second question that I have is I'll launch that. I'll do that a little bit later. I'll let this one run for a little bit longer. All right, so some client testimonials. If I think client successes and client feedback is the greatest measure of how well we are doing. And we do receive testimonials from time to time. This one is from a person called Matthew. He said that CoinStash is an Australian exchange that is safe and secure for self-managed super funds. Onboarding process was very fast and smooth. We are based in Brisbane, so with all our SMSF onboardings, you get to speak to a real person behind the scenes, whether that's myself or someone in our account management team. And we are Australian owned as well. Another testimonial is just about the ease of onboarding, the support during setup, and the transparency. I think the support during setup, account setup, is quite important, and I'll touch on that a little bit later. As with all these things, there's a disclaimer. Anything that I speak about today is just information and educational only. It's not intended to be tax advice, and please seek your own tax advice before making any final financial decisions or tax decisions. So, into the meat of it. What will we cover today? I'll talk about, firstly, crypto adoption trends. No doubt you've seen in the news, Bitcoin being the headline asset, reaching all-time highs. There's lots of commentary, articles about things that are happening in the industry. The second thing is, the topic I'll talk about is mainly around the technical aspects, so how to structure uh, um, crypto accounts and wallets correctly so that they are compliant from SMSF perspective. I'll touch on auditing and some of the tax and SIS Act compliance requirements. And then I'll go through a shorter section on practice management, how you can really make your lives easier so then you can help your clients better when it comes to crypto and in self-managed super funds. And then lastly, I'll do a demo of our integration with BGL Simple Fund 360, which I'm very excited about. And obviously a Q&A towards the end. So crypto adoptions. I was reading the AFI yesterday, and an article literally just came out that was quoting Fidelity International's latest survey. And the article was saying that nearly 40% of Australians, so about 10.6 million, have invested in digital assets, which is a huge number of people. And a further 25% of local investors say that they will increase their allocation in the next 12 months. Statistica forecasts the number of Australian crypto investors is expected to reach 11 million, just over 11 million users by 2026. So that's about another 500,000 users that are expected to invest in crypto. So what that means is that there's a lot of momentum. There's a lot of self-directed investing that comes out of this, because I know that financial advisors typically don't like to talk about crypto. So what that means is clients, investors, they're not necessarily getting the advice that they need. So they're taking matters into their own hands and self-educating themselves, which means it's really a bottoms-up type of investment category, which is different to typical financial products where it's top-down. What's driving some of this excitement around Bitcoin and crypto is the fact that it is the best returning, highest returning asset class, at least for FY25 and potentially for some of the few previous years. So you can see this is from the AFI as well. It's an article on the 7th of July. Bitcoin returned about 73.2%, the highest out of all the major asset classes. What is the Bitcoin investment thesis for those who are unfamiliar with it? And this is not me presenting my personal view. This is just what I've seen in commentary in the markets and speaking with some clients. The first is that they see Bitcoin as a potential investment hedge. It's a hedge against inflation, currency devaluation, and geopolitical risk, because it's not correlated to traditional finance asset classes. The volatility of Bitcoin and some other crypto assets is actually seen as a feature and not a bug. So those wild price swings the 20% ups and downs, people see that as normal and see it as a feature, something that they can use to their advantage, as opposed to being afraid of it. Not saying this is right or wrong, but these are just some comments that I've read. The third is that Bitcoin is seen as a digital version of gold, being that there is finite supply of Bitcoin, being 21 million coins. Similar to gold, gold is a scarce asset. There are costs involved in mining gold, exploring for gold, mining gold, and getting it out of the ground. Similarly for Bitcoin, there are costs involved in mining Bitcoin. So there are analogies to the gold market. There are Bitcoin companies on publicly listed Bitcoin companies that act similar to gold exploration companies or gold mining companies. There are business out there who mine gold or mine Bitcoin. The fourth thesis is that there is a lot of it is attracting a lot of significant institutional capital. So with the likes of pension funds, uh, other publicly listed companies holding Bitcoin as treasury, MicroStrategy being the largest one. Tesla even has some. I think some people are saying, okay, there's going to be more institutional capital, so I want to get in early. So that's driving part of the investment thesis. And then lastly, as a portfolio diversifier, this is more from a portfolio management perspective. There are financial advisors out there talking about Sharpe ratio. Sorry, financial commentators talking about having like a 1 or 2% allocation to Bitcoin can improve the Sharpe ratio of the portfolio. But just bringing it down to like a more personal level, at least from my experiences talking to clients, they have a lot of their wealth in property, whether it's in the personal name or in the existing super fund. And they want to diversify away from property. And one of the asset classes I consider typically is Bitcoin. So those are the main demand drivers, I'd call it, behind Bitcoin. So just to recap of the adoption trends, there's increasing adoption in retail and institutional portfolios for Bitcoin and crypto assets. The demand is driven by investors themselves, not as a top-down financial product issuer level, disseminated or distributed through financial advisors and other platforms. It's really organic, bottoms-up demand. It's again top performing asset class. Not saying this is a prediction of future performance, but I think this does get people excited, being it is the top performing asset class. And then the investment thesis centered around being a hedge and a diversifier are the real demand drivers behind Bitcoin and crypto assets. I might pause here and just launch the second poll that I have, and polls back. Okay, cool. The second poll is how many SMSF clients do you service? Less than 50, between 25 and 100, or more than 100? And then, okay, I'll go into the next section, which is compliance. So getting crypto into a self-managed super fund can sometimes be problematic if it's not done correctly. So I'll go through about how to get the accounts and wallets set up correctly so that you can support your clients when they ask you the question, how do I get Bitcoin in my SMSF? Some audit considerations, the tax implications, and some final comments around the investments compliance from a SysHack perspective, what to essentially avoid. So this diagram that I have prepared here is, there's a bit on the screen, but the reason I prepared this is just to demonstrate the flow of funds when a client invests in crypto assets on a crypto platform like CoinStash, or in fact, any platform in Australia. So on the left-hand side, we have the client's bank account. Typically, it doesn't have to be in a self-managed super fund, but I'm using self-managed super fund bank account as an example. It may be with Macquarie or ANZ V2. They transfer funds from that bank account into an account held in the name of the self-managed super fund on a platform like CoinStash. And that self-managed super fund essentially funds their Australian dollar account with CoinStash. They then take those funds and then swap it for a crypto asset such as Bitcoin or Ethereum or any of the coins that we list. And then it's essentially a trade. So from this point onwards, the client can either hold those crypto assets on CoinStash, or if they are adventurous or they feel that they can self-custody the assets, so take the assets similar to withdrawing cash, like physical cash notes from a bank. If they feel like they're comfortable in doing that, they can actually take the assets off the platform into what's called a crypto wallet, and that's on the far right-hand side. And then that crosses the boundary from being held on the exchange into it's held in the client's self-custody at that point. So, and then that process works backwards as well. When they are ready to sell, they can transfer the crypto assets from the crypto wallet into an account such as CoinStash, sell that crypto asset back to Australian dollars, and then withdraw that Australian dollars from CoinStash to their ANZ Macquarie account, whichever they use. I just wanted to paint that picture to illustrate that at both ends, it's the clients are essentially in control and custody of the assets, whereas in the middle, it's a platform that has control and over the assets, whether it's Australian dollars or crypto. So what that means is, sorry, I'll go back. So what that means is the middle section, it's really important that these Australian dollar and crypto accounts are held in the name of the self-managed super fund. What typically, how that could be set up incorrectly is that they sign up to a platform like ours or another platform in the personal name. They don't submit the trust deed. They don't submit any details, or that maybe there wasn't an option to set up a SMSF account, and then they transfer the funds from the SMSF bank account into their account with the platform. And as you know, that's considered to be early access, and that will be constituted a breach. And the auditor would probably pick up on that at the end of the year because they look at the account statement and, oh, it's actually held in the name of the person individually and not the self-managed super fund. In terms of self-custody wallets, which is the far right-hand side, they're commonly called on-chain wallets or cold storage wallets or cold wallets or self-custody wallets or even hardware wallets sometimes, or software wallets. So there's a lot of words to describe it. We'll be attending the BGL RegTech events, and we'll have a guide for you that basically try and decodes all the slang and all the language so you can understand what those words mean. But really, they are like USB sticks in a way. And what the clients do is that they connect it to the computer through a cable, and they enter a PIN, and they can transact with their crypto assets through that device. Alternatively, they can have a software-based or browser-based wallet like MetaMask. And that's, instead of having a USB or cable, it's built into the browser or the computer. And the only identifier is a string of letters and numbers. So similar to BSB and account number, the only identifier for these self-custody wallets is a string of letters and numbers. For crypto wallets, self-custody wallets, it is, this slide, it really is to demonstrate that the crypto assets in self-custody function like cash. they can transfer those crypto assets into other wallets that they own or third-party wallets. They can interact with software applications in that wallet. So these are essentially peer-to-peer crypto transfers. So it's like going to a big marketplace in somewhere and then speaking to a vendor directly and then exchanging cash and then they give you the product or service. That there's no intermediary or central institution like a bank or card processing payment that has visibility over these transactions. It's entirely peer-to-peer. However, those transactions are verified and searchable on chain, on the internet through a public database. There's a few out there, such as Etherscan, Mempool, depending on the type of crypto asset. If you have the unique string of numbers and letters, you can actually search up that transaction. It just won't have personal identifiable information, but the transactions are recorded. See how we're going for time. Okay, I'll reach for this. So best practices, when clients are setting up accounts, look for a specific SMSF account type. Also, best practice to have a separate email login and password for the SMSF account. Sometimes clients make the mistake of accidentally sending funds from the SMSF bank account into the personal account. At CoinStash, we pick this up because every transaction we scan to make sure it's coming from the same account as the account holder. And also sometimes check the transaction history and the financial reports to make sure that the account is in the name of the self-managed super fund. In terms of self-custody wallets, your clients may already be doing this, but definitely recommend them to separate wallet addresses and like physical wallets from their personal versus their self-managed super fund, just to avoid commingling those assets. Goes without saying, these self-custody wallets, they come with passwords or private keys and seed phrases that do need to be backed up. If those seed phrases or private keys or passwords are lost, then the access to those assets are essentially lost as well. And something that I like to recommend clients do is, because it's a long string of numbers and letters for these wallets, just to document an address book, whether that's in a minute or something like that. So then when it comes to end of financial year, the auditor can see, okay, this string of numbers and letters belongs to the self-managed super fund and the directors have minuted that. So in terms of audit considerations, I've had the benefit of talking to quite a few SMSF auditors. I'm not an auditor myself, so this is not firsthand. This is just what I've gathered from speaking with SMSF auditors who deal with crypto. These are some of the questions that they ask. First is, does the trust deed prohibit cryptocurrency investments? If it does, then regardless of what the investment strategy says, the self-managed super fund cannot invest in crypto. Secondly, is there a documented investment strategy that allows for cryptocurrency investments? I know my auditor asked me for that. So it is definitely something that they do ask for periodically, if not every year. The third is, has the trustee considered the diversification requirements? Now, some self-managed super funds are set up because the trustee or the investor really want to invest in a particular asset, whether that's property or whether it's equities or whether that's Bitcoin. And they're very headstrong and typically don't think about diversification. They might, say, I'll put 80% or 90% or 100% of my super balance into this asset. So similar with any other asset class, they do need to consider with crypto the diversification requirements. Fourth, fifth, and sixth is what I'll go through in the next couple of slides. But when it comes to crypto assets specifically, is there clear evidence that the SMSF controls the crypto asset? Is there reliable valuation at 30 June of the crypto assets? And lastly, is there a clean exportable transaction history covering all the activity in the year. So as for 4, 5, and 6, what CoinStash provides, and this is something that I'm quite proud of, is that at the end of the year, we're working through 2025 at the moment, but this is what we provide our clients in 2024. It's an audited account statement, which shows the assets, the name of the asset, the balances, the market value as at 11:59 p.m. 59 second, and then the the rate, and then the market value. And I've blacked out the client name and the email and all that just for privacy reasons, but we do provide the name of the super fund and the type, being in this case self-managed super fund. Now this report should be read in conjunction with an audit report that we provide, that Hall Chadwick Melbourne provides us. And it's essentially an independent reasonable insurance report that basically opines that we have maintained adequate internal controls and other accounting procedures to ensure that the annual account statements are not materially misstated. So I think some auditors like this, some auditors don't like this. It really depends on what the auditor looks for. Some look for a GS007, which we are in the process of preparing as well. Some don't rely on GS007. Essentially, what I try to do at CoinStash is to provide enough documentation that whatever constellation of documents that the auditor needs, we'll have. In addition to the fact that we have company account statements audited at the company level. So tax and crypto assets. I'll quickly go through this as well. So Bitcoin and other cryptocurrencies, if you don't have clients, or you just are starting to have clients who invest in this, they are not they're not currencies. For tax purposes, they are treated as CGT assets. And there's a tax determination 2014/26 that goes through that in particular for Bitcoin. But the ATO also publishes website guidance, which is, as you guys know, it's non-binding, but they do treat most assets, or go out on a limb to say that crypto assets are CGT assets, as opposed to other types of assets. Secondly, one common question that I get asked is, if my client swaps one crypto asset, Bitcoin, to another crypto asset, such as Ether or Ripple or any asset, does that trigger CGT? And yes, it does. It does trigger CGT event. And then there's the market value substitution rules. And obviously that means you have to go, as the accountant, go and find out what the market value is at the time of swapping those assets. Some clients like to stake the assets. So again, this is terminology that we'll explain if you go to the RegTech conference. We'll have a booklet. But staking is essentially locking up assets or putting up assets to earn a rewards or interest income, for want of a better word. And these rewards in the form of crypto assets are treated as ordinary income, and it's valued at the time of receipt, not the time of lodging the return. Number four, sorry, GST on is applicable on brokerage fees. So whenever a client trades on CoinStash or any other platform in Australia, there is a fee that's charged, and there's GST applied to that. Goes without saying that solid record keeping is essential. I'll go through the reports that are available with CoinStash, but without solid record keeping, it's very, very hard. And I appreciate this is very hard for you guys to provide this service that the clients expect. And just lastly, there's no proposed changes to legislation. The government has responded to the Board of Tax Inquiry, saying that they agree with the board's recommendation that there's no need to craft new crypto tax legislation just for crypto assets. So what that means is the ball's back in the ATO's court. No new legislation, which means that the ATO would need to, I guess, perform more audits or increase the compliance activity in this area. Um, SIS investment compliance. So two questions I get asked a lot as well is first, can I transfer Bitcoin in my personal name to my self-managed super fund? Absolutely no. In-species transfers of crypto are prohibited because it's not one of those assets where there's an exemption, such as listed equities. Um, Number two, can I invest in derivatives in my self-managed super fund? This one's, I like to say no, and that is the correct answer. But there are some there is an exception there when it comes to contract for differences or CFDs. But for the most part, I think it's safe to say no. Better to say no, because when it comes to derivatives, it typically involves, and these are offered by a lot of international platforms. They're very big international platforms. The derivatives typically involve the SMSF giving a charge over fund assets, and that's not allowable unless it's with an approved body. Stated in the Sixth Act, and most of these international platforms are not approved bodies. So you can't, there's no margin lending, you can't do any stuff like that. There's no shorting, for example. But CFDs, the ATO has come out and said in one of the rulings on the website, I can't remember which one, but CFDs don't give a charge of assets. So there are some providers out there who give exposure to Bitcoin to clients through a CFD. And I think best thing to do is to look under the hood, look at the website, look at the product disclosure statement. If clients can deposit, sorry, if clients can deposit, withdraw their crypto assets, they're likely dealing in a spot trading platform, spot platform. So that's like buying the physical gold, and then as opposed to buying a contract that tracks the price of gold. So yeah, if the platform like CoinStash lets clients deposit and withdraw crypto, that's allowable because it's a spot physical investment. So next part, improving practice oversight. When I speak to accountants, the biggest pain point and the most common complaint that I hear is that getting trading history information from a client who's invested in crypto is incredibly hard. Um, or I guess, sorry, getting any information from the client takes time. And it's usually at the 11th hour they send you the last bit of information. I strongly think that 80% of the work can be done very early if the client gives you the information that you need. So it is a pain point. So the real issue is not with the cryptocurrency investment asset class itself. It really stems from the lack of visibility and accessibility to transaction records. And what I'll demo next is our advisor view-only access, so which I mentioned earlier in the presentation. We also give you periodic state. Well, you can download periodic statements through the portal as well. So essentially, we provide you with the tools on CoinStash, so then you can move from being a reactive to a proactive player, so that you can better service your clients and avoid compliance or potential compliance breaches. So how are we going for time? Okay, I'll do a 5-minute demo of the integration and the platform. I'll share my screen. So this is an account, an advisor account on CoinStash. Now, currently the only way to access it, well, there's two ways, is if your client invites you. Clients on CoinStash can invite their accountants. You get an invitation email through your email address. And then you be prompted to create an account. We have help desk articles on our website. You can look through that, but we'll also send some details if you're interested. Then you create the account, and essentially you'll see the client's account on the screen. So in this case, this SMSF 10 bagger, so super fund or SF, has invited me, Simon, top-notch accountants to view their portfolio. Um, and you can it doesn't have to be self-managed disciplines. It can be companies, trusts, individuals. You can filter through the above, but you can also click on all clients to view them all. Sorry, going back to what's the second way. Now, second way is it's currently invite only. If you don't have clients on CoinStash, you can reach out to us through our advisor partner program. We can give you invite only access. So you can have a browse of the platform, give you like a dummy account if you need to. And yeah, in terms of the statements and the BGL sync, so if you click on view statements, it expands the types of reports. We have the audited account statement, which I showed before on the screen. You can download that and select the year. 2025 is coming. It's going through an audit right now. Cash statement is the cash, AED cash in and out, including deposits, trades, and withdrawals, and in commissions if they've earned any commissions. Transaction history is a list of all the transactions in CSV and PDF format. The controls report, like I said, which is the GS007, that's coming soon. But the one, obviously, that we're talking about today that I'm excited about is the BGL export. Now, there's two ways where you can sync this client's transaction history with BGL. The most elegant way is to have an automatic sync. So if you click on Manage Sync, I've already synced it. I can stop sync. So I can restart it. So you click on Sync, and once that button is clicked, the data is automatically sent to BGL's SFTP server. What you need to do is go into Simplifund 360, copy the account ID here into the feed management part of BGL, and then the data should automatically sync over. Now, at 10 a.m. every day, we sync the transactions of the last 24 hours. So every day you get updated trades if there are any. It's one and done, so you don't need to sync it again. However, you can stop sync if you want. The second way of syncing the data is to manually download the XML file. And this downloads the entire transaction history in XML format for you to upload to Simplifund 360. And then from there, you can toggle the periods that you want to upload. So yeah, I think hopefully that should save a lot of time for you guys if you have crypto clients on CoinStash, using CoinStash, and reduce the manual input errors. Now, the last thing I wanted to mention is if you do have a advisor account with us, you can request certain features. For example, you can click on this button, request a feature. I'm very happy to hear any feedback. For example, if there's a button that you'd like to see somewhere or something like that, very happy to do that. And just think if there's anything else. No, I think that's more or less it for this part.
Thanks so much, Simon. Very
Oh,
informative presentation. I think everybody would agree. And we did have a lot of questions come through. So we'll get to as many as we can, but anything that can't be answered today, you can hear from Simon and the CoinStash team afterwards. Before we do get into our Q&A session, I do just want to let everybody online know that CoinStash is a platinum sponsor at this year's RegTech event. So they'll have a stand in Brisbane, Gold Coast, Sydney, Adelaide, Perth, Hobart, and Melbourne. The tickets are free. So if you haven't already got yours, you can scan the QR code on the screen now and visit their stand to find out more. I think you mentioned, Simon, there will be some really informative flyers that you will be handing out as well. And as I said, we do have some questions. So if you don't mind, Simon, I might read out a few. If you want to answer them, you can. As I said, we probably won't get to all of them, but they're all reported. So we'll get back to everyone at some stage. I've got a question from Norman. If account is set up in the wrong name, can a declaration of trust be prepared to declare crypto account is held in trust for their SMSF?
Um, I guess it depends on the self-managed super fund auditor. Some may accept that. I have heard some accepting that. Um, but it's yeah, it depends on the subjective opinion of the auditor. But I have heard that being accepted, yes.
Yeah. Could you share your perspective on clients using platforms like Binance? Are there any red flags or best practices that we should keep in mind?
I think with Binance and some of the international platforms, um, firstly, it is are you getting the adequate reports? If you are, great. Um, is your are they accessing products that they shouldn't be accessing from a self-managed super fund perspective? And are you aware of what those products are? Like I mentioned, um, are they inadvertently accessing derivative products? Um, these are all the um, things that you should think about. And if you're not thinking about it, then perhaps you can ask them the question, what are they trading on those platforms?
Yeah, I've got one from Leah. Can the client leave the crypto on the platform?
Yes, absolutely they can. That's why we have the audited account statement. Some clients don't feel comfortable self-custodying the assets for whatever reason, so they're more than welcome to hold them on the exchange, and we give them those 30 June audited statements.
Yeah. Sabrina has asked, many auditors would qualify the Part A report if an SMSF invests in cryptocurrencies. Is this normal?
Um, from my experience, yes, if similar to wrap platforms where they cannot, uh, rec if they don't receive documentation that supports the fact that those assets are actually there, um, then they would qualify. Um, I know there are some SMSF auditors out there who don't qualify CoinStash users because of the fact of our audited statements. But then again, it doesn't seem to be much consistency. So I guess the more information that we can provide you and your client, the better.
Great. I've got Amy. How do we join the advisor partner program? We have a couple of SMSF clients using CoinStash.
Yeah, you can go to coinstash.com.au. In the top menu bar, you'll see SMSFs, hover over that, and then there'll be the advisor partner program or the accountant partner program that you can click on, and you can join the program there for CPT education, invites to webinars. We do have regular scheduled webinars, lunch and learns, and those type of events. And if your clients haven't invited you to join just yet, then you can prompt them to, or you can reach out to me, and then I'll see what's happening there.
Great. I think that's probably all we have time for questions. We have a long list of questions coming through, which is really great. But unfortunately, we just don't have time for all of them. Simon, I want to say a massive thank you to joining me today. A great presentation, and to everybody else online, scan the QR code, get your free ticket for RegTech 2025, and then go and visit CoinStash in 7 different locations. Thanks, Simon. We really appreciate your time today.
No worries. Thank you so much, Lily. And if there's any questions that aren't answered, I'll get to them. So you'll hear from me. Thank you.